Okay. So good evening, everybody. I'm excited to see you here listening to this announcement and this short video I wanted to add to the website. I have some very nice news for current investors, and I think this is going to be valuable for people that still is deciding if we give a try with if we will give a try with Kahn Capital and their investment ideas. So the news for today, and I want to keep this video short, as you know right now, what we advertise on the website is fund number one. We have our main fund, which is the one that returned over 70% returns in 2023, 2024, and with a little bit of entry price in 2022. So it's going to be around 15 months for that return. However, the good news is that we are launching fund number two. And I wanted to talk to you about that. So the idea of fund number two is to create a market neutral strategy. Fund number one is going to stay the same. I'm not going to change it. I'm not going to modify the leverage. I'm not going to modify the strategy. The strategy is already in place and working excellently. So why to change it? But what I want to do is to transfer the strategy from fund number one to fund number two and mixing it with short bets. I want to make a market neutral portfolio, which in case of the markets going down is going to be extremely profitable. Even when markets are bullish, even when markets are going up, short bets can be profitable. In the best markets in the world, you even have bad companies, which if you bet against, you're gonna make money. If you buy puts, if you short, if you buy swaps and all of that. But fund number two is gonna have that extra value for investors that might be interested in a product that includes short betting. And being involved with investors that can bring you short ideas. Okay. However, fund number one will stay the same. And just to explain you a little bit about how fund number one works, I want to show you a little thing. Okay. Today we're gonna talk about valuation and stocks. Okay. After this announcement. Okay. So when we talk about the valuation of stocks, we have to understand how markets work, okay? And for that, we have to suppose that we can play a little game with any stock out there, okay? Which is giving valuations. Everything out there deserves a valuation, especially when things are profitable. It becomes much easier to give a valuation to it. So let's suppose, for example, that we are talking about a product which is valuated within a range of $10, okay, to $0 in case it's worth nothing after any event happens. Sorry, 20, okay, in the highest of case, and then in the lowest of case it's going to be worth 0 in case something happened to the company, okay? Which is very hard that a company ends up valued at 0, okay? Or negative numbers in some cases. But without losing the focus, what I was trying to say is that if we play a game and we assign a value to a company, we might arrive to a specific number, okay? Which in this case, to make it simple, we're gonna suppose that a stock is valued at 10. Okay, it is valued at the $10 range. It is not a $20 stock. It is not a $3 stock or a $0 stock. Okay, after playing this game, we come to the valuation of 10, and this is going to be related with the cash flow, with the dividends. More important than the dividends is going to be the cash flow. However, markets like dividends. So let's suppose it's a stock that is providing $1 per year. It has a dividend yield of 10% or 12%. In that case, probably is gonna be worth $10 because people is feeling good about the stock, and they say to themselves, well, even if the earnings don't grow, if the net profits doesn't grow, if the earnings per share does not grow, in 10 years, this ticker symbol, this stock, is gonna pay my money back. So from that point, we come to understand the valuation of something. And here's when the important thing comes out. Markets are not efficient. Perhaps something has a value of 10 or a fair value of 10. However, markets are inefficient. Some stocks are overvalued, other stocks are undervalued. Okay? And this is very important to explain why fund number one is very profitable and why fund number two, a portion of it, is going to be extremely profitable. Okay, so fund number one is profiting extremely, it's having extreme returns thanks to the tension you have between the undervalued price and the fair value. Okay, many stocks that have a fair value of 10 currently are trading at $8 or 80% of their price. Okay, we will have right here a range. So when the price of the stock is going down and touches this point of being undervalued, in that point my fund starts buying the opportunities relative to some factors. Okay, sometimes I look at target much lower than 8 or 80% of the fair value. So my fund is profiting extremely from the fact that we are buying something that's worth 10 at 8, and then the volatility is creating increases, and then we sell and we make a profit, and so on. It's more complex than this, but I'm trying to make it simple to help you to take an informed decision. So fund number one is having very high returns. The past year we have over 70% APR. Okay, 70% plus, because of this friction you have between the undervalued price and the fair value. Okay, we're gonna put this low. Okay, 0. So because of the tension between this price and this price, we have a lot of opportunities to buy and sell and make extra profits. Okay, so another details is that we don't release great stocks. Sometimes the stocks we buy at 8 go up to 10, okay, or from the 80% of the fair valuation go to 100% of the fair valuation. In that point, we don't sell many stocks and we keep them maybe for 1 year, 5 years, 10 years, because the business is improving. So we don't want to sell away something that's doing great and it's going to perhaps going into 15 or 20 because it's going to become an overvalued stock like many others. Okay? And this is the reason why fund number one is extremely profitable. You have the undervalued price range, which you can use to buy things very cheap. And then you might have, for example, a $4 range, which we can call this the market crash range. Sometimes it's true that stocks get very cheap before bouncing up, which will happen in very strange situations or moments of extreme tension, which are possible. However, what I want to say from this is that it makes no sense to wait for that time, because if you wait for the time when you can buy at 4 or at 40% of the full price, that moment will never come, and you will never be able to buy yourself in, and you might have much better returns by having many cycles of this volatility than waiting 10 years or all your life for this moment to never come, so you can buy something extremely cheap. Okay, but it's a fact that this reality can happen, and this is why fund number two we'll have many short bets. When we are on times that prices go below this imaginary line that is never going to happen, having some short bets in the portfolio means that you have investments with an enormous upside. Okay, so in those cases, short bets that were expected to pay you, I don't know, 45% return will pay you a 200% return or 300% return, thanks to the volatility and thanks to markets going into this line, which I hope we never cross and probably we will never cross. Okay. But yeah, fund number one is working extremely well because of this volatility and because we are holding many great companies which already corrected price, but we didn't sell, and we keep them and we hold them because they are simply great businesses. And when you are investing in fund number one, what you are buying access to is to access great businesses that our fund buys and promotes. And when I say promote, I let you know that we will not tell you on the phone what are we investing in, because we want to buy it very cheap. If we tell you names of the stocks we're buying, it's because the stock is already expensive, okay? And you will end up buying a stock expensive. If you want to maximize the discount, the best thing you can do is to deposit with a fund manager like myself or many others, okay? So you get the best entry price, okay? When we are buying ourselves in, we are not going to tell you our ideas, okay? We are raising capital. We will damage other investors if we tell you. We will tell you in this point when it's already too late. So the best way to get yourself into the best ideas is to really go into funds, okay? And also you can look for other funds that have short ideas. I know many names of people that work exclusively shorting or making some combination of shorts with long bets and so on. However, the new today was this idea we're having, and it's already in progress, of launching fund number two with short bets combined to our current strategy. Okay, we are working on it, and perhaps soon we might have some ideas to show you. However, right now, as always, and as we've been doing for years, we will still focus on fund number one, and we will keep using it to produce great returns and great alpha for all of you. So I hope you liked the video today and was very informative. I'm excited about this announcement. Myself, I'm a value investor. I write books about value investing. So, I was really trying to find courage to go ahead and get myself into short investing, because I know it might be a fully diversified portfolio. Our portfolio is already diversified. We are extremely diversified, and we are extremely careful. Even if markets are doing well, we will be the first ones to sell because we understand perfectly the value of what we hold, okay, and the changes it may have. However, we understood that if you really want to create a product that's completely diversified, why not go ahead and create something that has some great upside on stocks and long bets, but also offer upside and an additional layer of margin of safety with some great short bets that we might study about and propose to our investors. However, if you want to stay away from short investing, as you see in our website, we never short invest. You can stay in fund number one, which is already producing great returns. And as always, you can just invest a part of your money in these great ideas, and the rest, go ahead, be boring, put it in bonds or your own business or whatever resource you have to produce a steady cash flow instead of great returns and great growth. Okay, so thank you for watching, and I hope you like this a lot and you feel excited about it like myself. Funds is the best tool to build and maintain wealth. So thank you, many blessings, and goodbye.